Welcome back. Hope you're having a good morning. Well, we're going to be kickstarting the year as well as the week. That's the fiscal year. And plenty of news flow in the last 3 days or so. Prakash Diwan joins us to help us out with a quick analysis on all of those stocks we just discussed with you. Hi, Prakash. Good morning and good to see you in. Prakash, let's talk about the tech stocks. And Infosys is in focus because of the tax refund. So it looks pretty good, in terms of the news flow. But your view on tech, Infosys, and what do you like from there?
Good morning, Nigel. Thank you for having me on the show. Yes, I think Infosys, of course, has this big news flow and very positive rub-off sentimentally and fundamentally. But what's going to be interesting for the entire IT pack after we saw a little bit of that softness come in after the Accenture numbers came through is the fact that most IT companies are very clearly staring at an opportunity related to AI where they will have something or the other in the AI value chain, if not necessarily, everything that's related to hard coding. There could be so much of work all of them could start pitching for that after these March numbers, the commentary is going to be very interesting in terms of new hires, new contract wins. And from that perspective, I think the largest companies, offer such a huge opportunity. I wouldn't be surprised if even the likes of Wipro start participating in this new gold rush of sorts from the AI side. Of course, it's been around for a while, but it's opened up much more broadly for players to look at. Infosys stands out as, again, the best bet, notwithstanding this particular news flow today, because TCS has run up a bit too much. The valuations are kind of getting ripe out there. Infosys has that headroom. So if you had to look at the top 3-4 players, Infosys stands out. But my focus continues to be on the mid-cap names. OFSS, even after this sharp run-up, Nigel, looks extremely promising. I don't see any reason why the likes of OFSS, you go smaller into this value chain, you have a Sonata. There are these opportunities which are very clearly promising enough. But as I said, just wait for the March end numbers, and you'll start seeing the commentary from the big guys set the tone for the entire sector.
Prakash, hi, good morning. There's also the auto sales that come out today, right, for the month of March. And the expectation is that two-wheeler sales will be very strong. So the whole industry is expected to grow about 25-27% year on year. Any stocks that you're bullish on?
Good morning, Sonia. So I think Hero is the one that should be the hero of the pack now going forward, given the fact that Bajaj Auto has had its fair share of upside from those 4,000 levels to almost 2.5 times. You've also got Eicher, which has been very rock steady in the last 1 year or so in terms of price, in terms of performance. TVS, of course, has always been the darling of the market in terms of valuation. It's a Hero Moto stock that hasn't actually participated. And these numbers that you are alluding to, Sonia, they primarily will come in from some sort of a restocking, the wholesale numbers getting better. Now, if that were the case, Hero definitely stands a better chance given their product portfolio and the broad basing of their product mix. So I think Hero has that space. But two-wheelers, again, you'll need much more than just a couple of good months. You'll probably have to see whether the demand continues to be even in the pre-monsoon periods of April and May. And if that were the case, then there's a re-rating that's kind of overdue, which has happened in PVs but not happened in two-wheelers. So, so I would wait for that. But at the moment, I'm still focused onto the largest passenger car OEMs, primarily Tata Motors. And now, of course, you've seen Maruti climb up thanks to the hybrid recognition of the high potential of hybrid technology. But I would believe two-wheelers might take some time, even after these good numbers come.
Prakash, hi, morning. What about PNB Housing? Abhishek was telling us that it's got some credit rating upgrades. For a housing finance company dependent on external financing, this is certainly good news. Your thoughts?
Good morning, Prashant. So I think I mentioned about PNB Housing as one of the best setups within the housing finance companies, especially after HDFC kind of vacated that space in terms of allocations to a pure play. Housing finance business. It's very similar to telecom. You have Jio, which is the largest player, but if I had to allocate money as an institution towards telecom and go for the largest, I would have to buy Bharti. I think within HFCs, after HDFC's exit, this merger with the bank, there is a lot of vacuum. Some of the players are trying to kind of get into this whole space with that mindset, with that presence. LIC Housing hasn't had its fair share of glory. But I think PNB, given the management change, the way it's kind of established itself when Mr. Kosugi came in from Calvin Homes, the way he's kind of transformed the business, they've started kind of separating themselves from the earlier trends and practices. And that is distinctly seen in numbers. It's taken some time on consolidation, but my guess is there's still a lot to go for PNB Housing Finance. The private equity ownership kind of gets it much more freedom. This is a space which, just imagine this was the year when interest rates were hard, and that's why there's the lid on the growth. If interest rate were to start softening in the second half of calendar 24, there could be absolute this thing on the stock. So there is a this thing what you call comfort. The valuations are not very rich, so you have that comfort as well. So I would be very positive given all the changes that are happening.
Well, Prakash, wanted your view on Ambuja Cements. The promoter entity gone ahead and they've converted some part of those borrowings. And it's pretty good. I mean, the stock price anyway is much higher than what the warrant conversion price was. But your view on Ambuja Cements and the other cement stocks, so the problem for the past quarter was that pricing was weak. And that's what, hurt sentiment. Though volumes are quite strong. Your view?
No, I agree. So if volumes pick up, that's far better than, just having to depend on price increase with very low volumes. It doesn't last too long. Volume increase is something, Nigel, which is never a one-off. And I think there's going to be an accelerated consumption trend that will emerge this time pre-monsoon. Remember, we are into the fourth year post-COVID. The entire cycle is kind of normalized. This is a full year of normal business. And there are so many housing starts. Housing takes up almost 42-43% of cement demand in the country. And if no new greenfield projects are getting added, somewhere, the pricing will have to catch up. Of course, in India, there is this fear of glut kind of a situation down the line once a lot of these new additional capacities, brownfield expansion for larger players goes through. But I would differ. The only fear is if cement prices were to be, if they were to crash, if dumping happens from somewhere else, using the sea route and all, which is an hypothesis which is fairly far-fetched at this point in time. On Ambuja specifically, I think the efficiencies that they have started incorporating, and I have spoken to a few dealers in terms of how things are looking, and the kind of, the entire, by the way, they've changed the entire platform on which the inventory management was carried out. So that's something which typically happens after you've done enough changes on the production side, because it's more front-ended. So if they've done that, you will start seeing in FY 24-25 a lot of benefits on the cost efficiency, which the management spoke about when they acquired the business. So wait for that. I think, of course, it's run up quite a bit from those 400 odd numbers. It's 50% higher from the time they acquired it. But I would believe it still has salience. Buy on dips is probably a better strategy on the cement side, especially with the likes of Ambuja and Ultratech.
All right. The other stock I wanted to chat with you about was Hindustan Aeronautics. I mean, the stock is up 70% in the last 6 months and orders are just flowing in thick and fast. They've received another almost 1,200 crore order from Cochin Shipyard. Is there still more to go on the upside here, Prakash?
So, you need to look at the fact that there's such a brilliant, strong moat around the business. Nobody else can come and challenge these people. I mean, you have leadership in a space where the government is so supportive. You have international orders thanks to the strong international diplomacy that the government of India has been engaged with. You will start seeing more of these smaller countries having to rely on India for technology on the aerospace aviation side. And my sense is that with the ecosystem maturing, the turnarounds, the order booking to realization cycle is actually coming down very dramatically. I'm sure somebody will catch on to that trend and start reporting about it, or some sort of anticipation built up around this. My expectation is that HL will always be now valued with very rich premium multiple valuations. But whether you should buy at this level, it's a big question, because you have slightly smaller companies in the defense pack which are available at probably less than, 20-30% lower than their 52-week highs. HL doesn't feature there. It's right close to that same level. But I would definitely buy some of these defense stocks, not HL necessarily, given its rich valuation. And it will, as I said, it's contradictory. I'm saying you don't buy because of rich valuation and the rich valuations continue. So when you buy, you'll probably have to wait for a meltdown if it happens in some of these sectors. But other than that, I think there's nothing stopping it from growing organically, at least at a rate which is higher than the industry.
Prakash, I wanted your view on some of these PSU metal stocks. The year FY24 belonged to them. Nalco, you had Hindustan Copper. They did very, very well. Hindustan Copper actually fell off the cliff towards the end of trading session on Thursday, but that could be an expiry-related factor. Nalco as well is quite interestingly poised because they're going to be getting the benefits from lower coal cost in FY25. And pricing is fairly good. In fact, it's improved quite well from the recent close. Your view on both these two names?
So, I think, Nigel, very clearly, these are names that sit on very significant moats and, almost monopolistic advantages. One of the reasons why Hindustan Copper reacted a bit negatively last week was probably in anticipation of enhanced competition from the Adani refinery, which started. People forget the fact that Hindustan Copper is not just into refining of 5 lakh, million tons, but it's actually a lot of mining of the ore itself, which nobody else is participating in. Given the kind of demand for power globally, look at where copper is. The Nifty is moving up. Mr. Copper will continue to do well in the commodity basket. I don't see any reason why Hindustan Copper won't participate in the rally again. The other name, apart from these two, which I would like you to focus on is Moil. There is a slight price increase that's been done after a fairly long gap. It also tells you that the kind of demand situation is yielding some sort of pricing power back to the name. It's kind of come off from its highs. I would believe it will start participating in this rally as well. NMDC, Nalco will have much more complexities in terms of their movements going forward. It's not going to be very secular, uninterrupted of sorts. But Moil and Hindustan Copper, I think, they absolutely stand out in terms of the advantages, the specific ores that they mine, and that the valuation and the price setup is very, very favorable for both of these names. So I would definitely allocate some money if I don't have mining stocks in my portfolio to these.
The biggest gainer this year, Prakash, so far has been Bajaj Auto, right? 35% gains is what we're seeing. You were making a small mention on the two-wheeler stocks a while back, but particularly on Bajaj Auto, I wanted your thoughts, because this month the expectation is that there would be almost an 18% growth in their volumes, and that would be led by a 25% growth in the domestic volumes, and that's no mean feat, right? I mean, consistently seeing a 20-25% growth. Do you think they can build on to these gains even in terms of the stock price?
So, Sonia, you're right. It's had a stellar turnaround of sorts, from a situation where in 22 we were talking about struggling exports and all of those in Nigeria, Latin America, and look where the stock is today or the business is today. The domestic segment, it's thanks to their segmentation that's helping them. They actually are not into premium bikes or high-end bikes as much as Eicher and TVS are. They're not into absolute entry-level bikes anymore as Hero is. So they've kind of got the sweet spot, and that's the segment that has actually continued growing even in a tepid demand scenario, right? So I would believe if that segment is to continue growing, there will definitely be some salience that's attached to it. But from a price perspective, I think it's pricing in a lot of that goodness. As I said, I would look at Hero Motocorp. If Bajaj has done that with a lag, Hero will also participate, and that gives you that comfort that Hero is not yet kind of moved into that. Hero had its own share of problems, of course. We all know about it. The key trigger in Bajaj, if you really ask me, is going to be how the CNG bikes are going to get accepted. It's an experiment. It's fairly potentially disruptive, but whether the market accepts that in terms of utility and application, that is what we would want to see. So I would wait for something like that before kind of building in some price gains from the Bajaj script after the stellar run that's already made. Of course, you had the buyback and all of those things adding to it, but I would believe it will consolidate a bit and wait for the next trigger, which potentially could be that CNG bike launch.
Prakash, the other space which saw, drawdown, a correction was hospitals, right? Now, is that opportunity? We sort of discussed that when that was happening, but Max has moved up from 700 to 800. Narayana has moved up from 1200 to 1300. They're still off the highs from where they fell when the news came that there'll be regulation and price controls, etc. On standardized procedural rates. That was the crux of it. What do you like in that space?
So one of the names that you mentioned is absolutely the most resilient out there. Narayan Rudale has, if you look at their price list and compare it with an Apollo or even Max for that extent, it's definitely something which will not get impacted if price restrictions are imposed. Given the fact that they've always segmented or positioned themselves to cater to the mass affordable, market in terms of procedures that they carry out. For hospitals, Prashant, you need to remember it's only organic expansion or maybe some couple of inorganic acquisitions for which some of them have been making, which actually leads to better efficiencies. If they don't do that, because given the existing facilities, there's a limitation to what you can do in terms of average revenue per bed. It's only from that, if you see, Max is the one that's been very rapidly expanding. In fact, today there's some news flow around them setting up a hospital in Lucknow. They've got some possession of a land parcel to set up a hospital. So that's where they're using the cash. Narayan Rudale hasn't announced any expansions, but if they were to, I think it will go to the next leg of growth from where it is. But it's definitely something which is the best out of the pack at this point. And the valuations have also become much more comfortable.
Kash, what is your view on some of these pharma names? You have some positive news flow on Auto Pharma today. Lupin as well will be in focus. How are you approaching this space? Because it's actually been the best start, for the pharma pack. They have actually been relative outperformers in comparison to some of the frontline stocks. Your take?
So I think, Nigel, as the news flow starts intensifying around approvals, which is the case in Lupin, for instance, every few days you've been seeing newer approvals coming from the US FDA. These are not blockbuster drugs necessarily, but there's lots that's happening in terms of their portfolio starting to wake up of sorts to come to life, which was the reason why it actually lost so much ground 3 years back when things in the US were very difficult. So, but Lupin has already done its bit in terms of the first leg of the move. You'll probably have to start going to the other names where you have, there was a very interesting analyst day conducted by Suven Pharma, for instance, which is a company that Advent has, and they've kind of started process of merging it with Cohance, which is the other portfolio company. You look at these small companies that are kind of becoming bigger at a very rapid pace. My sense is you'll have to look at pharma absolutely with a very positive lens. Because the value chain is very large, you would have API players, generic specialties. There's so much happening there. You will get options. In fact, the allocation from the institutions towards pharma is still not as high as what historically it's been, given the fact that the market cap representation is also slightly lower, though the names are there are many names in the sector. I would believe you can still look at specific names I'll leave you with. One is, of course, Suven Pharma, and as a matter of disclosure, I do have some personal interest in this. The second is look at smaller names like Natco. These are the names, the companies that have done a lot in the last couple of years to build their pipeline. As they start commercially, monetizing some of these, you'll probably see these bump ups in terms of earnings potential. Of course, even in the last 9 months, it's already done more than what it did, much more than what it did for the whole year. So if this quarter goes off well, the numbers come out, the market will start recognizing that this is not one-off. So there is enough meat on the bone in terms of the pharma names, and I would believe that's an allocation that you definitely have to look at seriously. Whether you look at big ones, mid-sized ones, doesn't matter, but don't go absolutely down the value chain in very small companies because there could be lots of triggers that could create volatility there. But the bigger ones, the mid-sized ones are extremely promising.
All right.